May 2022, Terra Luna collapsed with billions of user money. June 2022, Celsius went bankrupt with a big hole in their balance sheet. July 2022, BlockFi followed the similar path to Celsius. Voyager, Skybridge Capital hedge fund. All of these crypto firms have gone bankrupt. But that is not the only similarity between all of these. There is another man who is common to all of these crypto firms, and that name is Sam Bankman-Fried. No, he's not the founder of all these things. He was the first one who tried to bail out all these bankrupt crypto firms. Stanford, MIT, crypto billionaire, the biggest crypto fund. Some even called him the JP Morgan of the crypto industry. Here in this channel, we love to look at great figures who have influenced a lot in the crypto world. In fact, this video could have been about how great Sam Bankman's moves has been in the crypto world, but 8 days. That's all it took to take Sam Bankman-Fried from this to this. Today we are going to look at the eventful life of Sam Bankman-Fried and what led to where he is today. It is no less than a thriller movie. Well, Sam Bankman-Fried was working in a proprietary trading firm called Jane Street Capital when he first came into contact with this crypto world when he attended the 2018 Macau Crypto Summit. And that's when the idea of FTX came into his mind. And in 2019, FTX came into this world. What followed was the 2020 crypto bull run. FTX wealth surged. But what actually brought FTX into limelight was the 2022 crypto winter. When every other company was going bankrupt, Sam Bankman looked at the opportunity of buying these bankrupt crypto firms at a cheap price. He was the savior of the crypto world with the bankruptcy of firms like Celsius, BlockFi, Voyager. He kind of became a rock star. Everybody looked up to him. Not all of these deals came off, but the buzz never died. He even offered $5 billion to Elon Musk to buy Twitter. Seriously, this was at the height of it. He was the first crypto fund billionaire. And then came November 2nd. A report floated on Coinbase that close to 30% of entire assets of Alameda Research, worth $5 billion, was linked to FTX's own token, FTT. Now what's wrong with this? Except that Alameda Research is also founded by Sam Bankman-Fried, and this FTT token, well, what is this worth? There's a huge debate going on about its true worth, and this stirred up a huge debate. And among this confusion and everybody trying to understand, Binance suddenly came up and announced that they were going to sell a huge part of their FTT reserves amid their plan to sell off their equity in FTX. And that's the last tinkering anyone needed to do to let the floodgates open. There was widespread panic among the market, and everybody rushed to sell their FTX holdings before there was nothing left to sell. Mass withdrawals started happening, and within 72 hours, $6 billion worth of funds were withdrawn from FTX. FTX had to pause their withdrawals, but the damage was done. FTX was 80% down in market value. There was no turning back. What was really confusing about this debacle is that why was there a need to pause the withdrawals or even a gap in the balance sheet if the users started to withdraw their money from FTX? I mean, FTX promised their users that they do not speculate with their users' funds. So why was it so difficult for them to return the funds which they held and did not deploy anywhere else? Well, the thing is that they didn't really keep that promise. As per Coinmetrics analysis, what FTX did is that it lent away a huge part of these users' funds to its sister organization Alameda Research to cover up the losses that Alameda Research was continuously facing. And now even FTX own token now worth nothing, even Alameda Research is down to ashes. After the whole incident, Binance offered to help FTX with its bailout, which turned out really ironic because this Binance was the only thing with which this entire debacle started in the first place. Looked like a thriller movie plot, but Binance eventually moved out of the deal. As per them, they took a good look at the accounts of FTX and nothing much they could be of help as per them. Now FTX is facing probe from Justice Department from the US because it broke the trust of these users by using their money without their approval. I don't know what much can be gained out of this, but again, it's the retail users who are going to face the brunt of this mismanagement of public money by this crypto protocol. It has happened time and again with Celsius, BlockFi, and now FTX again. Well, the crypto world is volatile. It took 2 years for Sam Bankman to build an empire out of nothing and took just 8 days to return to nothing. Tread careful, guys. The worst is not yet over. The winter is yet to stay. I will be there with you. Till the next time. See you.